Yo, what's good everyone? Hope you're doing well. So I want to do a quick video that I'll put into quick tips on AU because I think it's a really good example of change of character versus break of structure, and then what I introduced quite recently about 15 minutes supply and demand levels and inducement, liquidity, and then obviously price delivery. So 15 minute, you can see I've obviously marked it all on so you can see it already. Previously we had price pushing up, forming high highs, higher lows. We have a nice impulsive move or an impulsive candle that leaves a mitigation block or imbalance, fair value gap, whatever you want to call it. But then what happens next is we wick the low, so a change of character. We then push down and we have a pullback. Okay, now the reason this is a change of character, not a break of structure, because this is a reversal, and that's really just, like I say, that can be just a mitigation of something to the left to push higher. Okay, so we have a pullback, then we actually put in a new low again, so we have confirmation of the trend change and an actual valid break of structure, because we can see low, bullish candle back up, break, and it's a nice break as well. We then have another pullback and we take the low, so we have equal highs or relative equal highs. We have inducement from this area where people are looking to trade this, or they're looking to trade it back once it revisits up in these levels here. Okay, and then on the lower time frames we had liquidity from these highs. As we know, there's always liquidity at the highs and lows of every sort of swing point in the market, or even any high and low in general, really. So price comes in. When we come in, we're looking for liquidity, manipulation, and then we're looking for our execution time frame to get involved in potential trades. Now, the reason why I wouldn't be looking at trading from here is because we've broken structure from here. So we have a valid supply zone, and if you're wondering why it's that candle, well, that's the candle. Okay, that's the last buy before the sell, but then we can refine it because we haven't shown momentum. Momentum kicked in on that candle, which is after. Okay, so now we know this. Let me just delete this off. We can delete this all off and we can go into a minute. Okay, so what do we have? Well, price comes up and then we start actually putting in lower prices, failing demand from these areas here. And what's price then likely going to do? It's likely going to tap into these highs and tap into that 15-minute supply zone, induce people in from these breaks of structure or changes in character, whatever you want to call it. Okay, and that's why we had an impulsive move up, swept liquidity, took the highs, corrective nature here, impulse down, and then what we look at, if we're looking at pure market structure, we have this as a high once we come in, and then we have the swing point, which is there. Okay, that's very clear, high, 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 low, and that's the most recent level, the freshest level of demand. Price comes in to mitigate range. This is so clean. Like, we have push down, and I've done a post when on Instagram where range creates supply or range creates demand. We have that here. So we have price putting in high, 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 low, mitigation of demand, reaction, build liquidity, and then we have the flip. So we foul, we get the reaction, we have a fouled reaction afterwards, and then we break the low, demand turns supply, and we have the last buy candle, which I will be looking at. I wouldn't be looking at taking that tiny candle up there or even the next one. I'd rather take this whole last buy candle before the sell, because you can see, look, my zone, my momentum kicked in out of my zone on that candle. Okay, and that's really the last candle as well. This candle also took the high from here. Okay, so it took a bit of liquidity. Okay, and then this was my full process. But a little bit of refinement for me. You can see I didn't get tagged in. What I've been working on with the mitigation blocks that I've spoken briefly. It's sort of my own little tweak on the mitigation blocks. Is what I've been seeing myself and then implementing. So if we can delete that off. If we really look at this and try and understand why price didn't come into this zone and it come from here, what can we see? Well, one thing that stands out is mitigation block. Okay, so where is it? Well, we look for the momentum that's on this move here, these 3 candles, which caused the flip and the break, and we take the candle, and then we look for the wick, basically, which we could, it's this next candle here, basically. Okay, and then price comes into the EQ. I believe it does. Supply, we can just check. Either way, we would have got tagged in. Yeah, so we just fall short of the EQ, but you can see that's why price come into here, then it continued down from there, because if we look at this candle, so 1, 2, 3, you can see it's really, there's nothing that price would need to come back up to mitigate if BFIs have intentions of bringing price down from here. There's no real reason why they would need to bring it up to here. So we can also look at this wick. Okay, this wick here, price comes back into that wick. Okay, it mitigates, and you could also be looking, although I don't look at this, but we have this low. Okay, price comes into that low there. So a bit of refinement for me. Looking back at this now, in hindsight, I'll be looking at that candle there, and that as my mitigation block, if we get that one correct, and then be looking to take that, something like this. You haven't got to be taking the EQ, it's up to you, but 2.5 pips, I wouldn't be accounting for that high, because like I said previously, price wouldn't really need to come up to here if we're going to sell off from here. Okay, and then you can see we would have been tagged in and price really committed. But that's refinement in my own trading, something I didn't see at the time. I'm not always going to see things when they happen live, because it's hard. It is hard sometimes, and that's how it is. But we ASR and we learn from it, and we can see that's where I put my entry. I had 2.5 pips as a stop loss, I believe, and didn't get tagged in. And you can see price took the low on this move here. Even looking at this, we have a low. Okay, we have that low, and that, although it's not very impulsive, price took it with that low, then come back in to mitigate that candle, then continued from there. So essentially that's a supply and demand flip in itself. Then you can see price really committed, and we can just continue this on. Obviously I would be managing on these structural points, okay, and then would have been taken out, I think, from that low. As the trade progresses, we can be more aggressive and lock in more profit at the highs, and then we can see price pull back, because it will always pull back. It's not always going to continue. You can see we just range, go to a 15, we take the low, and then we do push up. Okay, so yeah, that's a trade that I didn't get tagged into, but there's definitely a key lesson to be learned in this video. So yeah, I thought I'd cover it, and yeah, I hope your week was good. Let me know if it was, and yeah, happy weekend.